Welcome to SaaS Backwards, a podcast that helps SaaS CEOs and CMOs to accelerate growth and enhance profitability. Our guest today is Dan Balcauski, founder and chief pricing officer at Product Tranquility, a consultancy that helps high-volume B2B SaaS CEOs define pricing and packaging for new products. Hey, Dan, welcome to the podcast.
Good to be here, Ken. I'm really excited for our conversation today.
Me too. This is one of my favorite topics. And often when I meet new SaaS leadership teams, pricing is one of the things that I often bring up and they haven't even thought about. So here's a big opportunity to do some good in the world. But before we dig in, could you please tell us a little bit more about yourself and your company?
Yeah, as you mentioned in the intro, I run a firm called Product Tranquility and spend all my time thinking about how to help B2B SaaS CEOs and their businesses define pricing and packaging. So sometimes that's for net new products. Sometimes they've got an existing offer out there that's not getting it done. And I've been in the software world my entire 20 plus year career at this point. Started out more on the builder side with an engineering background, but quickly learned that although code is interesting, I found myself much more interested in how we created value for customers and how those turned into dollars and cents for the business, and eventually found my way into business school and product management roles of increasing levels of responsibility, where I got a lot of opportunity to really dig deep into what created value for customers, and often would get wrangled into a lot of pricing conversations because a lot of other folks didn't know what to do with the pricing and packaging either. And they said, "Hey, Dan, you've got a shiny MBA. Can you come help us with this?" So I had a lot of scar tissue that I learned along the way as an operator and went off on my own about 5 years ago. And now all I do is help companies with pricing and packaging.
Well, it's really interesting. In my early career, I was what we now call engineer also. I started out as a junior programmer at IBM.
My first real world job was with IBM. I did a 6 month co-op for them when I was an undergrad in engineering.
There you go. So more stuff we have in common. I found the people side of the equation more interesting than the machines. And I think packaging and pricing, a lot about how people think, right? Their value perception, their problem awareness. So I think it's an interesting kind of corollary, a little very deep thought there as we get started. Um, but maybe it would be good to really dig in on this. So tell us from your perspective, what is the value of pricing in a SaaS business model and why the leadership team really need to pay attention to this business model lever?
Yeah, if you are running a SaaS business, really there's only three ways to grow your company: acquisition, monetization, and retention. And for better or worse, acquisition sucks all of the oxygen out of the room. Probably good for you and your company, Ken. For better or worse, monetization and retention don't really get a huge amount of attention, and they're really, really powerful. And so as we look at all of the implications that pricing and packaging has, bad pricing and packaging can really be like sand in your go-to-market engine, but good pricing and packaging can really be a lubricant, really help you hit those top performance speeds.
Yeah, what's interesting, actually, in our business, we take a very holistic approach to SaaS go to market. And from my experience, acquisition is a lot harder than retention and growth within the base. And one of my favorite slides in a client pitch is the Breaking Bad image where Walter White, so he's taken his wife to the storage unit to see this mountain of cash that he's got in the storage unit. And I use that as my slide to explain why we need to address pricing. We're leaving all that money on the table. So to me, it's the easy money in an ongoing SaaS. If you've got 10, 20, 30 million in revenue and you haven't addressed pricing in 18 or more months, seems to me that's one of the first places one might look for additional growth. What do you think?
Yeah, I think you're absolutely correct. And I would say most companies, when they come to us, have hit somewhere in that range of revenue. And they realize that maybe they took a flyer on their first attempt at pricing and packaging. But since then, their product has really grown in complexity. And so now they need to think about, okay, how do we maybe break this up into multiple offers that create upgrade paths that align to different customer needs or customer journeys? How do we talk about different capabilities in a way that customers can understand, because maybe we have this big monolithic package that you bought before. And so, adding more features does not equal more value in the mind of customers. Often they're just trying to wrap their arms around what is this thing. And so it's being able to tell a better story around that. And I think you hinted at something that comes up quite often, which is this myth out there that somehow pricing and packaging is a set it and forget it. Like, oh, we did pricing 2 years ago, which means it's done. I don't know about you, but if I'm running a SaaS company, 2022 looks a lot different than 2024. That looked a lot different than 2020, both in terms of probably the capabilities you've shipped in a couple of years, but also your competitors, the macroeconomic environment. So it's this consistently moving target. And I think it's one of these things that sits in the background because those CEOs, the COOs, they're getting a bill every month for AWS for their infrastructure they see the payroll they're paying to engineers. That's a very concrete cost, but you're not seeing on your P&L, oh, you made 10 million in revenue. If your pricing was right, it could have been 20 million. That's not there. I don't know any accountants that are putting that in the quarterly book reports. And I would be very scared if there were accountants putting those in quarterly book reports, because I don't think those are the right people to do that analysis, but it does fade into the background.
No, I think it's an amazing thing to me that people don't look at this more frequently. Maybe it's just that so many SaaS executives are not SaaS executives by training and history. They might come at it as subject matter experts. They came into the business seeking to solve a problem, not necessarily wanting to be software execs, and they're just not students of the model itself. So I think that might be a big part of it. Certainly, when I meet CEOs or CMOs who've done this 3, 4, 5 times, pricing's on their list. Whereas if they're SMEs that grew their own thing, a lot of times they don't even understand the conversation. So why don't we dig in a little bit? There's a few things here that this next topic really, I think is really valuable. And what is the impact of pricing on revenue, profitability, and my favorite, valuation? Because a lot of our clients come to us when they're trying to build toward an exit and they think about new logos, they think about building their sales team. But how would you, if a CEO asks you, hey, what's the likely or possible impact here, without making promises, what are the things you would say?
Well, it's an interesting topic because I had a client call this morning where this came up, and there are many different kinds of goals that we might talk about, right? We could think about category goals in terms of I'm trying to establish a beachhead for a brand new market or trying to grab market share type goals. There are your P&L type goals, right? I want to increase revenue. I want to make sure I match my pricing to variable cost components of my price so that my loss doesn't get out of control. There are even unit economic goals. I want to increase my average revenue per account. I want to increase my annual contract value. I want to increase my net revenue retention. Ultimately, an effective price, I would say, is best served by keeping in mind long-term profitability. The question in everyone's mind then is, who's defining long-term and what do we do in the interim? It is not uncommon to see, for most software companies, I would say sub 100 million, you are probably best served by using pricing and packaging to accelerate that top line revenue number. And it's not uncommon to see 20% plus type acceleration from companies that seriously undergo a rigorous approach to their pricing and packaging and see that impact on their top line revenue.
And the valuation question, I just want to come back to it because that's where there's been a lot of pain, right, for the SaaS, scale up SaaS companies.
Mm-hmm.
And maybe if you can talk to the relationship between successful pricing exercise and valuation, that might be good. People might be able to impute it from your last answer, but if you've seen it actually happen, I think that might be worth a little bit of airtime.
Yeah, for most public SaaS companies. There's companies like Meritech that does very good analysis on this, where they look at valuation multiples, and usually you're looking at annual recurring revenue, and then the public markets collectively decide what multiple you're going to get on that valuation. And then that trickles back into the private market, privately held companies. And there's some amount of a public company, say a Snowflake or a Datadog or whoever it might be, is trading at a 6x revenue multiple. They're hit a certain level of growth curve and maturity, and it could be really difficult for a company at that scale of maturity to really have super fast revenue growth. So then you look at maybe the smaller companies in the private markets, and then you're giving valuations that are maybe a little bit higher of a multiple because their growth rates are also quite high. So it's still based on that metric that I was mentioning before of accelerating that top level revenue growth, because there's very little you can do as a business to change your implied multiple. We can get into a whole conversation about blended rule of 40 and how you balance growth and profitability. But for the most part, you have to accept the market valuation multiple with some modification around the edges, but you do have control over what that top line revenue and that growth of that revenue looks like.
Yeah, so there's the message, right? If you're the CEO, CRO struggling to improve valuation, you can either go get some new logos, retain some existing customers, or maybe if you haven't taken a solid look at pricing, might be a good place to go. I want to dig in a little bit on packaging because you bring it up as a married concept with pricing. So could you just walk us through the four elements that you describe for SaaS packaging of price, metric, model, offer configurations? And this one was a new one on me. And maybe I just knew it, but didn't know the word fences, price fences.
Yeah, well, you're a quick student, Ken. I got to say, look, when it comes to SaaS pricing, most executives think that what you charge will determine your success. In fact, who and how you charge determines your success. And when I talk about pricing, I always mean pricing and packaging, as you've pointed out. It gets a little awkward, so I'll often just talk about pricing. But I spend a vast majority of my time with clients actually focused on those elements of packaging. And maybe it'd be helpful give folks an example that maybe is a little bit more relatable, where we could talk about everyone's favorite fast food chain, McDonald's. So the price metric, this is what you charge for. And in B2B SaaS, this might be API calls or gigabytes of data or seats. But this is like McDonald's charging for each hamburger. Like I get a hamburger, the price on the menu says this is the price for one hamburger, a cheeseburger, whatever your preference is. Apologies to anyone who's
Cheeseburger,
dairy
please.
free. All right, I'll give you a cheeseburger. So you're paying per cheeseburger. And I give you how many units of cheeseburgers you want, and I pay you that amount of money. It increases per cheeseburger. So that's your price metric. Price model, like how and when payments flow through the system. B2B SaaS, we think about subscription or pay as you go or perpetual transaction. Well, when I go to McDonald's, I know Taco Bell was experimenting with subscription. I didn't hear what their final result on that was, but I've not heard of McDonald's coming out with any subscriptions. But I go and I buy my cheeseburger, my Big Mac. That's a perpetual transaction. I own that Big Mac for the foreseeable future, and I have all rights to do with that Big Mac whatever I see fit, right? And so that is a perpetual transaction or a price model. And then we have these offer configurations or bundles. So how are sets of features grouped together to create offers? And we all know you've got the Happy Meal, you got the value meal, right? Where I get not only the burger, but the fries and the Coke. And how do we create those offers such that they resonate with what different groups of customers value, and then price that whole bundle according to the value that they're getting there? And there's a whole art and science there. Like we probably do not want to swap out the kids' soda for a coffee in that Happy Meal. That would be a bad idea because the kid doesn't want a coffee with their Happy Meal. Or maybe we add the toy to the Happy Meal, right? So these are ways that and we can even say in that situation that maybe the toy is actually the real value, not the hamburger or the fries or the drink to the kid. They just want the toy. And so then we have price fences. So these are things, how we change what two different customers pay for essentially the same product. And these fences usually break down in terms of things like identity, time, or volume. So using our McDonald's example, I've got a small, a medium, and a large drink. All of those, I pay a different price per ounce based upon the volume of that drink that I buy. And so that would be one example in our space of a volume price fence. And we know if in the B2B SaaS world, if I'm purchasing a CRM, usually I'm not going to pay the same amount for the first seat of that maybe Salesforce that I purchased that I am for that thousandth seat. There's going to be some break that I get on a volume curve. So similar things play out there. And so there's a lot of art and science that plays into thinking through those different characteristics and ultimately getting those factors. Look, at the end of that, we've got to put a number on it. But that's at the very end of the process. And honestly, we could get the number totally wrong. If we nail the other pieces, that's going to be incredibly impactful to our business.
Thanks for that. I appreciate it. And I love the analogy.
Mhm.
And I've been to Taco Bell once, so I probably won't buy a subscription, just saying. But I think the idea of integrating packaging and pricing is something that is not intuitive until you really dig into it and you start thinking about what are the components of a price, and it's actually access to the things the software is going to do for you.
Well, and I can speak as well from being an operator at a company, because usually when you join a company as an employee, still a little different for the founders, but when you join as an employee, there's a certain way of doing things. There's certain offers that are there. The company's made this decision. Oh, we sell this thing as a subscription. Oh, we charge by this. So it sort of blends in. It's just part of the background. You don't even know that exists as an option because that's just the way things are. And so it's not until you look at hundreds of these things that you realize, oh, okay, there's consistent patterns, and these are the major levers that move between and that create really important optionality that help us fit what we're selling into the structure of our market.
Agreed. I want to move on to another topic. It's super hot right now. Won't be hot soon, but it's hot now. But where does AI figure into pricing and packaging decisions? Are you, as a practitioner, benefiting from the ubiquity of large language models in your research or comparative pricing studies?
So look, when we think about AI and pricing, I think it helps to put out a couple of landmarks because quickly kind of lost in the conversation. So I think what we see right now is there's two very different types of company that we're talking about when we're talking about AI. So there's the AI as a service. So these would be the foundation model companies. This is Meta with their Llama. This is OpenAI with ChatGPT class models. This is Anthropic with Claude. There's several other players in there, but those folks are selling, and we might think of that as AI as a service. Like they're selling an infrastructure piece. And I want to separate them from probably where most of your listeners are, which is not working at OpenAI or Anthropic or Google, embedding or enabling their applications with artificial intelligence. And so that's important because then in that case, one thing I would caution folks who are listening against is let's not make the same mistake in this go round that our brethren in the Web3 world made, where they said, hey, you liked that CRM that you bought? Well, now we got a CRM that's based on blockchain. And everyone went, huh? Like, why do I care? So in that case, AI is simply a mechanism by which you help customers achieve some outcome, some job to be done. And pretty soon, everyone, I think the VCs will get a chuckle out of this because they don't see a pitch deck now that doesn't talk about how the company they're supposed to invest in is an AI company. All right, it's going to become ubiquitous. But as software companies, as executives, we don't talk about, oh, we run on a SQL Server backend or an Oracle database because nobody cares. It's an ingredient. Is I'm assuming you're storing my data somewhere and I'm assuming it's reliable. Let's talk about the job I'm actually hiring you to do, which is not your technical underpants, shall we say. As we think about that, I think there's a couple of different directions I'd be happy to elaborate on, but I think that is first and foremost, because I think what's happening right now is there's an immediate need to, one, talk about AI to your customers as if they understand what that means, and most of them don't, as well as try to charge them for AI when it's the path between this ingredient and the product that they're buying is not clear of how that actually translates to value for them.
So there's the AI within the product, right? The how the work gets done. And I guess what I was really trying to get at is AI supporting the pricing expert and the pricing exercise. So is there a way in which this all-knowing interface can help us, for example, boil down published pricing in a way that would probably be very difficult for us to do with other tools? Have you run into opportunities to use AI to give you a leg up on competitive landscape, as an example?
So there's a third landmark, which is using AI in pricing. And so there we start to make this other distinction between what a lot of people were calling AI, say, in the pre-ChatGPT era, and generative AI, which is now mostly what we've been talking about in this last couple of minutes. So there are a bunch of companies that have been around for decades at this point that help companies dynamically figure out what price they should charge. A couple of them are like Zilliant and Pros and Price Effects. Apologies if I'm missing some others from that list, but those companies are helping mostly high transaction type B2B type industrial goods. Think of a 3M or a company that's selling chemical products, figure out how to price their goods. And this, as consumers, we run into this where you try to buy an airline seat and you look at it one day, it's one price, you look at it the next day, it's another. There's a whole world of artificial intelligence, quote unquote, build into what they call these yield management or revenue management systems the airlines and the hotel companies have built over decades. Those systems don't work so well, or I would say at all, in B2B software for a whole bunch of detailed reasons where we can explore if it's interesting. But so I do want to separate that because those have existed for a while. There are some promising areas where generative AI capabilities may hold promise for research type activities. So you might imagine, and this is front and center when OpenAI released their O1 model, they actually talked about pricing strategy as being a use case for why you might use the new O1 model. I've since watched several videos of people going through it and comparing against what GPT-4 would say, and it's not very clear that O1 is really giving you any better answer. But these strategy type questions have helped me think about what potential competitive reactions might be, or who might be a fit given the value. You have to take those with a grain of salt. There's some potential interesting applications folks are trying to build, but I haven't seen anyone pull off successfully. There's a lot of customer research that tends to be involved in pricing projects, trying to understand like how customers understand value. And so people have tried to set up these sort of, you can think of a focus group, but instead of actual people, you've got a bunch of AI agents sitting there and asking about a product concept and how much you're willing to pay. And there's some interesting early data that could be promising. I would not recommend anyone go down that route quite yet.
So I think I want to jump to then what does it actually take to run a pricing study? Because at some point we have a pricing problem, you figure it out, but now you've got to go do it. So what does it look like to do a pricing study and a project to realign pricing?
Going back to something that we were talking about at the beginning of the conversation, which is what metrics, business objectives can pricing impact? And I mentioned several of them. It can be gross margin, it can be net revenue retention, it can be increasing annual average contract value. I think one thing that's really important is define where you're trying to go. I can't tell you how many engagements I walk into where the executive team is not aligned on what the objective is, right? We could talk about what might be better or worse. I'm not a big fan, for example, of market share as a good metric to try to be optimizing as part of a pricing project. But look, if in the CFO's head, they were trying to optimize gross margin percent, the CEO's trying to maximize ARR, and the CMO's trying to maximize the amount of MQLs they can generate, and the CRO is trying to maximize the quota attainment for their reps, you've already got a problem. There's going to be no amount of research or study that's going to solve that problem. So everyone's got to get on the same page of what are we actually trying to accomplish. And you'd think that would just be like, duh, but it seems to be more elusive than you might imagine. It is one of the interesting parts of pricing and packaging is that it is one of these areas where every C-suite executive at the table has a big stake in what the answer is. And because of their position in the organization, tend to have a strong bias towards what metric they want to see improved with it. And so I would say step one is there's many roads lead to Rome, but first we all got to agree that we want to get to Rome, because otherwise it's going to be very difficult to parse the data afterwards and make everyone happy. So that's step one. Step two, we really have to decide or define what's the decision problem and what are our relevant uncertainties, because it's very rare we're nothing. And it's very rare that it's, well, we're just kind of shooting in the dark and we want some pricing person to come tell us what it is. Usually there's something along the lines of, hey, we're thinking about launching a new product. We think that we could charge customers somewhere between $50 and $100 per seat. If it turns out that customers aren't willing to pay more than $40, we should not even invest in the product. So now I have a very defined decision and I have relevant uncertainties defined. So it says, hey, given the expert knowledge in the room, we think willingness to pay for this thing will be anywhere between 50 and 100. We got to put some number on the website, maybe. We'll get to that later. So we'd like to know, is it 50? Is it 100? Is it 75.99? Can we charge more than 100? But if it's less than 40, we got to go back to the drawing board and we got to tell engineering, hold up, we're not going to actually go invest in building this yet. And product management's got to go back to the drawing board and figure out what's wrong with, are we not solving a strong enough pain point, et cetera. So now I have an objective I'm trying to achieve. I know my relevant uncertainties. I've got a decision problem. And now we can design a study around that to figure out, okay, what are the best ways, and I can talk about different methodologies we might use to narrow it around that question of a price level. Is our price metric well defined, and how might we go about that? What are the features that stand out and differentiate our product versus the competition? What are the features that are going to drive upgrade behavior between, maybe if we have good, better, best offers between tiers? Now we can go do some qualitative and quantitative research and analysis to figure out what those questions are. Then that's going to refine our hypotheses, and eventually we're going to roll that out. So there's a diagnosis, hypothesis, where are we trying to go, research and analysis, use that to refine your hypotheses, and then, okay, this is the direction we want to go and roll out.
I appreciate that. So it's not a simple answer, and yet the path is pretty straightforward, right? So there's a lot of work to do to get through those four gates. You brought something up. It's one of my favorite topics to talk with clients and prospects about. This should be a pretty, I assume it's a quick answer, but maybe not. So should pricing appear on the website?
It depends. But unlike most consultants, I will tell you what it depends on. Good data on this is a little bit hard to find. The best numbers I've seen say about 75% of B2B SaaS companies have public pricing. Okay. So you're in good company if you decide to put public pricing and packaging on board. There are some very bad reasons for not choosing to publish your pricing on a company's website. Like, we are afraid our pricing is too high or low. Our competitors will get easy access to our pricing information. Our pricing doesn't represent our actual price because we discount so much. Those are bad reasons. They signal that there are other more significant issues to resolve at your company. Those are symptoms stemming from poor pricing process, value proposition definition, go-to-market strategy, or sales process. There are some excellent reasons for not publishing your pricing on your company's website. For example, you deal in a highly regulated industry that dictates how pricing can be presented to your customers. For example, the US federal government. Or I've experienced this and I've worked with clients who say, hey, we need to come help us with our pricing and packaging. I say, great, send it to me because it's not online. And they send me a 50-page PDF. And each of those lines of PDF is basically an Excel table.
If it's more complicated than configuring a new car, you probably shouldn't put it on the website, right?
So you could put that online. No one would understand it. It wouldn't help your cause. And again, in that case, just call me and we'll help sort you through that. But I would say, like, overall, first question is, this is one example where really thinking about what are my customers doing and what does this industry kind of segment look like? Because are you the only player in your space without public pricing and packaging? Because I think, like, there's this chain of logic, which I understand, that says we want to be able to talk about our value and describe that value to our customers before we talk about price. And our sales folks are really good at doing that. But the problem is, if you're the only one, say you're in the project management space competing against Monday and Asana and Atlassian, well, they all have public pricing. So your sales folks aren't even getting that at bat. You're not even making the short list because the pricing's in the header. I navigate there. I could see, okay, that's with my budget. And like, yeah, these people, I don't know. It says contact them and I don't want to do that. So I've got other things to do with my time. So I'm not going to go any farther with them as a company. And then I think there's kind of three overall models. So public pricing and packaging, and again, I would say is about somewhere between 50 and 75% of SaaS companies. Like, if you have standardized packaging, horizontal products with a large homogeneous market and competition, a high volume and velocity or product-led growth type model, like, that's really good for public pricing and packaging. On the other end, no pricing or packaging. You got a very enterprise sales motion, complex packaging that salesperson has to walk through, or a very high difference in willingness to pay between segments or a small addressable market. Like, if you're selling to the Fortune 50, you probably don't need public pricing and packaging. It's just every deal is going to be so bespoke to a certain extent that it's probably not going to help you, and you're probably going to end up in that complex packaging conversation. There's this kind of middle option, which you probably see a lot as well, which is public display of my packaging, but no price levels. So this is helpful, for example, if you have companies that have easily defined tiers like good, better, best, but there ends up being like, oh, there's a high difference in willingness to pay between segments or a small addressable market. So those are the three ways and how you might think about that decision.
I actually have a hybrid one that's one of my favorites, which is it's an enterprise product, but there's a departmental and even small group or individual user
Mhm.
scenario. So I like to put the public pricing out there and then, hey, if you're an enterprise, give us a call because the enterprise buyer can say, oh, it's $9 a seat. Sure, we can afford 5,000 of them. But if it's 500 a seat, well, maybe it's not in my budget. So I
Mm.
kind of like that scenario. But I'm a big fan of put as much out there as you possibly can because your competitors definitely know what your price is. There's no doubt about that. And I agree with you. If your packaging and go to market is a mess, well, that's on you to figure out. Shouldn't put you out of the running, especially if the category has a lot of exposed pricing. One last question I want to go through before we wrap up. A lot of times, our listeners and people we refer episodes to in the future are about to become a new marketing or sales leader at a SaaS. And they're trying to get a landscape for what are the problems that need to be fixed. And I'm wondering if there's something obvious that a new CMO or CRO could be looking at to tell if pricing is a place they should focus attention. Like, are there some obvious signs that pricing is a problem at a prospective employer?
Well, I think, again, if I'm having a conversation with a CEO or senior executive, like, one of the first things is pricing impeding achievement of your goals. Competitors are outcompeting you on value. You're seeing that in, like, how much you're having a discount or your win rates. Your teams are struggling to effectively communicate value. And I see this a lot with very technical founders who have priced the product more in line with the product and its architecture than the customer and the value that they get. And so salespeople have to do this mid conversation pivot between, hey, we were talking about the customer and the problem we were going to solve, and we had them all jazzed up, and we showed them the demo. And they asked about pricing, and all of a sudden I had to switch from a focus on them to a focus on our product and how it's built so I could explain how it's priced. And all of a sudden the customer's eyes glaze over and it just totally throws the mojo of the conversation in whack. If your existing customer segmentation is not really helping you drive decisions or explaining customer purchase behavior, there's really no rhyme or reason. Like, that could be point of a pricing problem. if you're not seeing customers upgrading between tiers or expanding sort of their overall usage. So this goes back to that net revenue retention metric, which is important. We're going to see, so gross retention, I got 100 customers at the end of a year, 90 are with them, 90% of them are there. But then if I'm looking at net revenue retention, how many of those added additional seats or purchase an additional add-on or an additional product? And if we're not seeing the movement in that net revenue retention number, that can often point to a pricing or packaging problem. If you got the wild west of discounting going in your sales team, that can often be a problem.
So that one case, we talked about it in the prep session. So it's easy to point your finger at the salespeople and say, they're out of control. But what do you think it might also mean?
It can be that they're out of control. So I see things in multiple ways, right? I do not ascribe to malice which could be explained by incompetence or bad pricing structures. Look, salespeople have a very difficult job to do. Price and discounting is one of the few levers that they have in order to encourage someone on the other end to take action, especially as you're coming up against a month or a quarter boundary. And so they're going to use the tools that are at that disposal. A lot of them don't have a very deep toolbox. So some of that has the company created discounting mechanisms? Are they enforcing that? Are they monitoring it? But I've very often seen the other case as well, where you've got a really jacked up packaging and sales folks are trying to fit a square peg into a round hole, and they've got a hacksaw, and that hacksaw is the discount lever because you've put a bunch of features into a bundle that those customers don't value. And so the customer's point blank saying, hey man, like, I get it. When IBM comes to buy this, I bet they want all these bells and whistles, but I work at Joe Blow's, SMB, and I'm not going to use half of this stuff. So why are you charging me the same stuff? Like, yeah, I get this, the price for enterprise, but I'm not going to use any of this stuff. So put yourself in those shoes of that sales folk. What are they supposed to do? Now, there are better and worse ways to go about this, but that can often be a root cause, is that we haven't really thought through how does our offers match the structure of the market that we're selling to, such that we give our salespeople, enable them with the proper give gets to say, oh, okay, this is over featured. Oh, we've got this lower cost, less featured package that actually is more suited for a company like yours now that I understand more of what you need. And so now you see that structured in the list prices between those, where they're not having to reach for a discretionary lever of discounting.
Fabulous. I think that's a great place to land our episode. Hey, Dan Balcauski, if people want to learn more about your company or reach you, how can they do that?
I'm happy to connect with listeners on LinkedIn at Dan Balcauski. I also run my own podcast called SaaS Scaling Secrets, where I interview scale up B2B SaaS CEOs. So if folks want to learn from other founder, entrepreneur CEOs on scaling a SaaS business, can check us out wherever podcasts are found.
Perfect. If you haven't subscribed yet to the SaaS Backwards podcast, please do so wherever podcasts are distributed. If you want to reach me, I'm on LinkedIn/in/Ken Lempit. And my SaaS demand generation agency, Austin Lawrence, is at austinlawrence.com. Dan Balcauski, thanks so much for appearing on the podcast.
Thank you for having me, Ken.